Right, welcome to the show, guys. I wanted to quickly show you a few bits and bobs here. I'm not going to really do much of an analysis today because I believe I did one yesterday. I want to show you a few bits and bobs here. So there's been some market data, and I wanted to show some accuracy and inaccuracy in the data. So obviously this is the Bitcoin index chart. This kind of takes the whole global Bitcoin markets, we're talking about all the exchanges, puts it together and gives us candles based on that, right? And then we've got, for example, exchanges like Binance, for example, where we have its own specific data. So this is more related to the actual exchange itself, right? You know, it doesn't take the global market in account. So what we have here, and the data we're talking about, is this specific data here, which is the 1, 2, 3, 4, 5, 6, 7, 8 candle, and then having this where we've got a higher low and then a lower low, right? But actually the data is completely different if you look at the index chart, right, which is calculating everything. On the index chart, and this is the one I actually showed on the short yesterday, last night, I actually tried to answer Stephen Hendricks. And here we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Now, what happened with this particular candle at the time of making the video? It was just before 1 a.m. I was making that video. I think it was like 11 or 12, something like this, like an hour before we closed the candle. And I did say this was indecisive, and look at this. This was a very, very indecisive. So we had a little fraction of a pump, which actually gave us the positive green candle. We can count it as a green, even though on Binance, if we did check Binance, it's not a green, it's actually a red, right? But we can take this and we can say, well, actually, we'll take the index because it has a longer data. I mean, if you're looking at Binance, you're only seeing data. For example, if I go on a weekly, if I switch this off, where is it? Let me switch this off. If you're looking at this, right, you only have data up to, where is it? 14th of August, 2017. So we don't really have much data. But when we're looking at the index, right, and we do the same thing, for example, on the index, we say, okay, let's go right to the other side of the index. And what do we have? We have enough data here from 2010. So that gives us a lot more information than what Binance would. So we see this inaccuracy and we need to act on this. And we say, okay, fine. We have some data, it's good enough, but it's not the best. So we can't really go by that. But we have more data here and we should go by this. So what data are we talking about? We're talking about the candles, right? And I've kind of plotted every single candle that we have. If I go back onto the daily, you'll actually see what I'm talking about, right? So I've plotted every single candle, every single time we've had these mega high rallies, right? So we had a 10-day rally here, for example. This is a 10-day, 10-candle rally here. You've got 10 candles here, so I've marked it, 10 candles, 12 candles, right? Here we've had 14 candles. Here we've had 8 candles. Here we've had 9 candles. So we've had 9 candles once before, we can see, right? 9 candles, right? And then we've had 9 candles here, so we've had it twice before, right? So we can see these data, 8 candles, 8 candles, right? 8 candles, for example. So we're looking at this data, we're counting exactly how many times we had it, 8 candles. So what I've done is I put the numbers there to actually tell us exactly when we've had what, right? And currently we've had 9 candles here. All right, so according to this particular chart, so I know some people might agree or disagree. I hope this kind of clears that information that there is nothing to agree or disagree. Now, while we're on this 8 candle business or 9 candle business, let's have another look at something else as well. So yesterday I mentioned that on a good case scenario, we could be looking as low as the 37,671. And you can see we were not on it, but we came close enough where we had this particular area, 38 something was the low. What was the low? Let's see if we can actually zoom into this and see this exact data, right? So the low we had was 38,297, right? So that's not that bad. I mean, here we had, you know, a simple we call it 38k, right? 38k low, which is actually very good compared to the 37.6. Only a few $100 difference here, maybe about $600 difference here, but still really, really good, right? And why we use this indicator now? Yesterday, if you remember the shorts, I pumped out quite a few shorts. I think I did about 3 shorts, right? What we were looking at is this specific line here, which is the options expiry date. And you can see every time we have an options expiry date, we have a pump few days before that and then a dump on that specific day. And this kind of gives us confidence that this is the exact same day we had the dump. So that's what we're doing. And we can follow these targets and we have the dates marked here when we're going to see a next one like this. Now we know after something like this happens, we end up seeing a pump, right? And sometimes this could go down for a few days. So if we look in history, you can see that we have a dump, we might have another dump, dump, you know, just taking us, giving us another lower low, right? And we can see this on this particular data that it happens pretty much all the time. Here was quite different. Here we had 2 days before and then on the day we pumped, right? So ultimately what we're seeing is we do get a pump just after these dumps, but we can expect it to go lower. And this 37.6 is still in play. So we might actually close the candle today, have a low here, and maybe even have a third one. I mean, this is just me making an assumption. The data doesn't suggest so, but we might have a third one here on a third day, giving us that 2 day over, which is Sunday, which is pretty good actually, because that means on a Monday we should see a positive candle, you know. And if we do see a low, we can always remember, we assume the low to go as low as the 618 level, because the Fibonacci's are always respected. But there's more to this as well. What do we see every time we see a pump like this? Whenever we see 8-9 day candle or 10 day or 14 days, right? You know, we've had this in the past, right? What do we see? So let's go back and see something, right? Let's go all the way back to the 2010, right? When we first saw the 10-day candle, you can see just after this 10-day candle, we had a pump. We had a 12-day candle, we had a pump, right? And we can go on and you can see every single time we've had this level of candles where we've had more than 7 candles. So 7 candles is okay, it's an average, we do get them quite often, but more than 7 means 8 or over. We see 14 candles here, we see a pump incoming, right? And this seems to be a pattern that's playing. So we have 8 candles, a pump, right? You can see again, we had 9 candles here and we had a mini pump here and then obviously a little dump, right? Which was it? This was 2014. So this was in a bear market. We had this pump, gave us this 9 candles, which is you know, insane, right? You know, you get to see this, right? This was the first time we had it in a bear market. So here we've got, you know, a bull run, for example, and then we have a massive pump, right? So there's only once ever in history we've had a 9-day candle and then a dump because it was in a bear run, right? This is in a bull cycle. So in a bull cycle, we see whenever we have these, we have a massive pump coming after that, right? We see this, we have a massive pump coming after that. Again, let's move over to a closer time, 2017. We see a massive pump and then the market ends here, right? Where's the next one? Here's the next one. We get 2019, pump, and then market ends here, right? So we're looking for these particular levels and we're saying, okay, what's the situation? What's it showing us? Every time we see these pumps, we get this, you know, insane move. So this is in December 2020. We end up seeing this and then we have a little bit of a correction and then we pump up all the way to January, right? And then you can see it keeps on continuing. We're constantly seeing these kind of a pattern. So when we're here, what can we assume, right? You know, so there's 2 assumptions we can make here. One, because we are below this level, this is not 100% bullish. It has a 50-50 chance of breaking out. If we go above this level and come to this 43, top of this mark, right, then we can assume that we've got a 50% chance of pumping up to this level here. This could easily be a fake out. Right? So remember how I was warning everybody, this could easily be a fake out. Now, I am very bullish, obviously. I'm bullish when it's down here somewhere. I'm not bullish when it's here because this is freaky. When you're trying to break this neckline and the attempts have been fierce, so far it's good. Everything's looking positive. But remember, we could still expect to come back into this blue box here. And if we come into this blue box here and we get dragged down into this 0.6 level and we can't hold it, well, then we're going down again. We're coming back into this channel. Right? And remember, it took us a long time to get over this channel. So this is what we need to do. We need to break above this line. A few more days is not a problem. I would say anything up to next week, we should give it up to next week. So if we did give it up to next week, say for example, this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, right? Sunday. So by Sunday, we need to see minimum 42,640 for us to break above this and confirm. If we have this, then I think we're going to be solid. Because a lot of the information we're looking at, right? When we're looking at the stochastic RSI, for example, on the daily, is showing we're too high. We need to come back down again. So we are definitely going to come back into this level here. Also, if we look at the weekly, you can see, you know, weekly is just insane, right? So this is like the first, so here we've gone slightly above this, just slightly above this particular one. So this is technically a higher high, right? That's what we can call this, a technical higher high, but it's not high enough. We need to break above this particular candle. So I don't know if you can see this. Let me just do this, right? You can see that this very minuscule level here is where we need to get up. This 41.5, you can call it, right? If we break above this, then we're fine. But even then, we're not out of the out of trouble unless we get another candle above this particular level, which is the almost 46.5. You can call it 47 as well, just for the sake of it. But that's the candle. Yeah, you can call it 47 because if you look at it, there's a wick there, and if we calculate the wick where the high was, it's almost 47. So I'm just going to ask everybody to just kind of, this is not financial advice, obviously. I'm not a financial advisor, but everybody just be careful what you're doing. But sometimes, like these marks, these lines here, so these yellow lines, you can actually use them as an indicator for yourselves, because these are the exact dates when we have a market dump or an options expiry. We can follow these data and we can see what it's kind of showing us. Are we going to go down? Are we going to go up? What are we going to do? But ultimately, we're using this data to predict certain things. Again, we're following the Fibonacci's, and I'm gonna change this Fibonacci very soon. So I'm just giving you a heads up on this. You might see another video with this Fibonacci gone. I'm gonna change this Fibonacci as soon as we have another green candle here to confirm, or even a red candle. It doesn't matter. But what I need is this week to close, because we've still got a few more days left to this week. You can see 2 days and 7 hours for this week to close. So let's close this week. See where we close. Do we close here, which is pretty good? It's not that bad. Or do we close above on the Fibonacci 1618, or do we close on the Fibonacci 1.2, right? So the idea is, where do we close? Do we close here or do we close there? Either way, it's not a bad deal. This prolongs it. This doesn't prolong it. But then this does bring in a lot of confidence for the people coming in from Monday, right? So that's all I wanted to say here. Just have a look. Remember these patterns. Now, I did say that first time we're making history. Actually, I was wrong, because I actually was looking at the Binance one and that was incorrect. So I wanted to correct myself and say, look, this is not the first time. This is actually the third time in history that we've actually done 9 candle days, right? And if you look back, you can see we've got plenty of other data. So the 8 candle, we had it 5 days. 8 candles, we had 5 days. We've had 14 candles and 12 candles and 10 candles. So we've had up to 14. I think if we do a 15 candle, that would be a new world record for us, for the Bitcoin community, something for us to actually celebrate and probably go and have a party or something. Definitely make our own pizza day that particular day. So yeah, I mean, other than that, guys, the market seems okay. It's a little bit bearish today, but then again, every weekend has been slightly bearish, apart from a few, right? So when you look at this, you can see that we currently where we are, like the 37.9 is a good price. Is not a bad deal to have, right? We're not that far off, right? We're only like what, 40% or something like this away from where we are. I mean, look, ignore this. This is the 90-day, but we're talking about the top market top, right? So where we are, and so far everything looks quite good. Also, if you look on the weekly, what you're seeing is the pump levels, right? The weekly pump levels. The weekly pump levels have been insane. BTC 21%. This is a king doing 21%. That's insane, right? XRP, obviously, because of the news, it's been pumping a lot. I'm not a fan, this. That's a different story. But we will see a lot of altcoins pumping. Like, for example, Polka's pumping hard. It's down, sadly, but it is going to come back up again. We're looking for the all-time high targets again. So for us, every single buy that anybody did during this dip, you're looking for these targets, right? So these would be your, sell your initial investment and get the profit out, right? That's what's going to be. But look, great bargains. I mean, we talked about a lot of these coins. For example, where is it? This one I talked about. Look, it did a 50%. It's just insane, right? 50%. Whereas the other one I talked about the other day, let me see if I can find it. Rune I'm looking for. Give me a second. Let me see if it's here. Kasuma we talked about, right? Kasuma still okay, still a good buy zone. It's not much of a difference, still a good buy zone. What was the other one we talked about? Rune. I mean, look at Rune. Beautiful. So remember, as I said, we taking advantage of Rune while it had this kind of a situation. So I told you I'm doubling it down on this. So this one's done really good. Happy days on this one. But ultimately, guys, we can see the action, right? Ignore what you see here. Just look at this. I mean, you don't ignore this. This is your discount, obviously, but look at this pump. This is all you got to see, right? So if you bought it 7 days ago, that's how much you would have made right by now. If you bought it, I mean, look at this quant. This is a new one, actually pumped on Coinbase as well. 76%. Brilliant, brilliant. So there are some, I mean, coins out there, but one thing I want to say, and this is regarding a message somebody sent me. They were talking about some coins, like, shall I buy a couple of £100 or something like this, right? I just want you guys to be really careful right now, okay? So what I want you to do, and let me take you back into this chart. Let me just show you something here, right? I'm just going to zoom out and show you something here, right? Let's go to 2013. This is where we are. This is where we were, and this is where we are now. And what I want you to be careful about, you don't want to be stacking too many alts or too many coins right now. You want to be preparing right now, is when we hit this level, to get the hell out. Because after the pump, you're going to have the dump. So right now, you don't want to be buying too many coins. You know, this is no financial advice. I mean, you do you, up to you. You know, it depends on your tolerance level, right? If you have conviction, if you believe in something, then of course buy it and hold it. That's not a problem, right? And I have plenty of those. But what I'm going to suggest to many people, and I'm going to do myself, I'm not just preaching, I'm actually going to do myself. I am considering very soon. So what I'm planning to do is once I get confirmation that the market is going to continue, I'm going to get ready to actually start selling most of my alts that I have, if not all of them, and going into USDT or something like a stable coin. Also, I've mentioned already that, you know, when we hit the top, right? When I currently hit the top, and where was the top? Let me see if I have that chart. I can show you. So, for example, if we hit the top around these levels here, right? You know, these particular levels here. Let me see if I had it here. I'm sure I had that chart here somewhere. Yes, this one here. Actually, look, I had it here. So when we hit that top of that range, right? So when we know that the logarithmic confirmation and everything comes along, right? So I'm using this specific chart. When I see this confirmation that we go to this level, whatever my trading portfolio is on BTC, right, or an Ethereum, I'm actually going to sell half exactly at this particular level here. When we hit this line here, I'm going to sell half of my holding portfolio. Not my holding, sorry, not my holding portfolio. That's a different one. I'm talking about my trading portfolio. So I'm going to sell my trading portfolio, half of it here, and hold the other half until we reach this level, and then dump it all, and then just sit on stable currency. Whichever one. It doesn't matter. It's not about USDT. It could be DAI. It could be anything, but anything stable. That's what I want to do. I want to just hold on to the stable, because after this we are going to see a dump, massive correction, and then I want to pick it up again when we hit these lines here. So yeah, just as we're going, basically. So I'm going to be looking at my fibs. I'm going to look at everything. Most importantly, my first sell is going to be here. My second sell is going to be here. I know if I hold on up to here, I can actually make more. But the point is, you guys, you cannot time the market. You cannot time, because what's going to happen, and this is one of the most crucial, important thing you have to understand, right? We could easily have a situation where we go here, spike up one wick, and then down. Right? So this is my risk tolerance level, right? And I'm going to gamble the other half, because when we say, for example, we go here, we enter here, we have this confirmation, this is where I'm going to do half of it. We might have a wick here and then come back down again. I mean, collapse completely. So for me, this is where this line would be my sell order. Now it might go up, might even go to the moon, might even go up to here. I'm not taking that risk, because what happens after a pump? Well, we have a guaranteed dump, right? So the idea is I'm going to sell half here, I'm going to sell the rest here. It doesn't matter how high it goes, it's going to come back down here. This is where I'm going to have my buying order, or I'll assess at the time. Even if I have my buying order here, it doesn't matter, right? But I'll have an assessment, and I'll start dollar cost averaging into the market, rather than basically kind of FOMOing or anything like that. So I'm just going to be patient. I'm going to sell here, hold tight. I'm going to wait for it. As it goes down, I'm going to reaccumulate, and if I do, whatever amount I sell here, I'm going to buy a lot more here, and then I'm going to continue the cycle next term. So for me, remember, even though this is my trading portfolio, technically I'm still a hodler, you know what I mean? I don't sell, so it should be cool. It should I mean, as I say, you do you, I do me. But more importantly, guys, right now is the time you need to start thinking about condensing, right, your how much you're holding, right? You need to start thinking about condensing. It's like, okay, I've got 50 coins. Do I really want 40 of them? Do I really want? And you got to get yourself a package, right? Decide which are your top 10, top 20 coins that you want to hold, or you want to hodl for the next 5 years. Grab them, hold on to them, move them away. That's a different story. But anything else you're there for to make money, well, now is the time to make money. Anything you've lost money before, right? Now is the time. So remember, not when you get back to this level. We are going to go up to this level, because the pump is going to take us above the 65. So when you make a significant amount of money, you need to start taking your initial investments out if you haven't already done so. And if you have, then yeah, carry on, guys. Go to the moon, make some money, but be careful on what you're going to be holding and what you're not, because remember, 90% of the coins that you're going to be holding, and even I'm talking about the whole market, 90% of them are going to dump hard. So just be careful about that one, and we move forward from there. So other than that, guys, my colleague here has decided to make a lot of noise, so I have to raise my voice. But other than that, like, share, subscribe, and I'm going to talk to you later. Adios, my